Let's pray. Heavenly Father, we thank you for this day that you've blessed us with. We thank you, Heavenly Father, for the new day. We thank you for their new mercies and grace that you've blessed us with this morning. We thank you for giving us this opportunity, Heavenly Father, to go through this training session. We pray, Heavenly Father, that this training session may bring value and impact to our customers in their business. We thank you, Heavenly Father, and we pray, Heavenly Father, that will give us strength and opportunity to keep on taking our clients and our customers into these valuable and impactful training sessions. Thank you again for each and every one of our client and customer that is here with us. Thank you also for the staff and the panel and the host, the guest speakers that will be taking us through this session today. We pray all this believing in your mighty name. Amen.
Amen. Amen. And thank you so much, Lucy, for that prayer. We are happy that all of you have joined, and we want to really appreciate our customers because they have joined in good time. Our session today on our webinar, we normally do this every Thursday, and good to see that we have a very good session today. So the agenda of the day is to make sure that we go through the training on the personal finance and business cash flow management, and we'll be taken through by Christopher Wandoi and Edward Kusawa, and we'll then later have a callback presentation. Maybe Chris, as we proceed on the presentation. After that, we will have question and answer session later. Which we are going to take us through. And this will be talking about our MSME packages that we continue to support you, our customers, for the businesses. And we are starting immediately. We are supposed to take 1.5 hours. We end at 12:30. And just in terms of the important information is to just tell us that yes, our videos and our microphones are muted. You may not be able to speak just to avoid the interruptions. And we encourage that we use our chat box just to share our comments, our questions, our feedbacks, any reaction that you'll be having there. Feel free to share. And if the presenter asks a question, feel free to even lift a hand and give a green tick, share your reactions. You can give a thumbs up and even give a clap. And most importantly, we want you to enjoy this session. It's a very good topic that affects all of us, whether you're in business or you're not. But I know majority of you are doing business, but this is a very, very good topic. So we want you to enjoy the session as we progress. I think as we progress, then again, I want to take 1 minute just to ask you to share your name using the chat box down there, where you are coming from, and what would be your expectation in this particular webinar session. So feel free to engage us using the chat box. I think you can post there for around 30 seconds just to encourage you to tell us where you're coming from and maybe what will be your expectation for this session. Yeah, so we can, you can just go ahead there and type and tell us what is your name, and what are you looking forward to get. Good. I can see a boy from the Vihiga County gain new insights. That is very good. Thank you so much for that comment. I see Frederick from Thika. Good, all the way from Thika. Asante. James Mwangi from Mongata Rogai. Karibu sana, James. I see Kennedy Joroge. Thank you so much for joining. Good time. David Onchari. We have someone from Nairobi. This is again Kennedy, saying that he's coming from Nairobi. So you can see we are represented from all over the country. Ibrahim from Garissa. We have someone from Dandora. Kennedy again, also from Mombasa. And we also have Joanne from Kiambu. Dan from Wingi. Thank you so much, our customers, for joining in good time. And I can see some of you really joined quite early. Benson from Mwingi. Yeah, you can continue to chat, and we'll be reviewing these expectations as we progress through this session, and we'll be looking forward again also to hear from you. Then after this, then we proceed to the presenters. Then we have two presenters who will be taking us through the personal finance and business cash flow management for MSMEs. And I will then later come to talk about the bank product. But before then, you see, we have Christopher Adoi. He's the director and founder of PAS Kenya Consults Limited. He's the organization development consultant, and he's an accredited trainer by ILO. And then we also have Edward Kusewa, again, a master trainer certified by IFC. IFC is an arm of World Bank, and he has good experience in training and other projects. So then it's just to call us to be attentive and have a note and pen and just learn something. But before we go to them, I want to take this opportunity to ask Moses Gitau. Moses Gitau is our head of business banking department, just to give us a welcome and maybe give 2 comments before we go to the training itself. Moses, if you can hear me, you can you can unmute yourself and just give a welcome. Thank you.
Yeah, thank you. Thank you very much, Peter. And good morning to everybody. My name is Moses Gitau, head of business banking Cooperative Bank. And I do support all the needs of the MSMEs for Cooperative Bank, and also support the product called asset financing. On behalf of Cooperative Bank, I would want to welcome all of you to this session. I think, as Peter said, it's a very critical session, and I know most of my customers have been asking for this. And today we are very much honored to have 2 gentlemen here who will be presenting to us. So let me welcome my customers, then also welcome Christopher and Edward as we tackle this discussion on personal financing and business cash flow management. I think it's our commitment as a bank to continue in terms of supporting our MSMEs during this COVID period, and even into the future in terms of number 1, passing on the information. And we'll be seeking professionals out there to help us in terms of passing that information. We'll also be speaking to our staff here in Cooperative Bank, consultants, and all those other teams that we can get to ensure that we pass quality information, quality knowledge to our customers, and specifically the MSMEs. Today's topic, I think, it has two dimensions. It has the issue of personal financing, which is very critical, and I think it comes in handy to help us in terms of at the personal level. But the critical aspect of it now is what we call business cash flow management. And sometimes it's very difficult to separate these two, especially when we have the small kind of businesses that you are talking of, and a micro business. So sometimes it's very difficult to separate what is personal and what is business income. And even as we do appraise, and I know Charles and Edward will be talking about that, even as we appraise a customer, an MSME for qualification of a credit facility, there is really no demarcation between personal and business income. And that's why it's very critical to say then, how then do we manage the personal financing that will impact into the business cash flows? Because at the end of the day, if you are to draw everything from the business for personal use, and I think the experts will be telling us more about this, again, it will affect the cash flows in the business. But let me not preempt what will come through from Edward and Kasewa. Again, let me take this opportunity to invite you, and feel much welcome. Let's chat, let's engage, so that we give feedback. And also, as Edward and Christopher present, feel free to ask questions. Feel free to also give share your personal experiences in terms of what comes through, so that we can also learn from each other. It's a forum that we also learn a lot from each other. So let's share, so that we also learn from each other. So without much ado, I would want to take it back to Peter so that we can go to the discussion, Peter. Thank you so much, Peter.
Thank you so much, Moses, and even for getting time to be together with us and giving us that welcome. Asante. This I want to invite Chris Wadoi, who will be taking us through the first part of the session to proceed. Welcome, Chris, if you can hear me. Thank you.
Thank you very much, Peter. And Moses, thank you for the welcome. And all the customers, we are glad that you have joined so that we can move together this morning. Now, just before we go into the discussion, just a little bit about what we do, which will be of interest to the participants, is that as an organization, we do a lot of mentorship for business people. And we are working with them closely just to understand them and to see how we can support them. So a lot of issues in terms of managing your customers, managing your books, what do you need to do to ensure that that your business grow to the next level. So those are things that we can do. And as we continue with interacting now, we'll see how far we can go and support each other. Now, as it was said now, we'll be taking you through Edward Kasewa and myself, Christopher, will be leading in the discussion. And as just Peter and Moses did mention to us, please feel free to engage us through the chat box. You can comment, you can give your ideas, you can give your concerns, you can raise the questions so that we move together to the end. Now, without much ado, I want us now to go. You'll hear Edward when he comes in. I'll be bringing him on board as we move on with our presentation. And I know there are other part of our team members also who have joined, and maybe you'll get them as we go through the discussion this morning. Now, we begin from this note with a quote from one of the serious business people and the founder and CEO of FedEx, called Fred Smith. Now, he says something that really touches me, especially now when we interact and talk about some of these issues that are important to us as business people. Now, he says, I quote, "What made you successful in the past, want today, and want in the future? Innovate and grow or vanish." And I know all of us who have joined this webinar, particularly the customers, and together with CoopBank, who want to see that the customers can flourish and grow and grow and grow. You do not want to vanish, but you want to grow. You want to innovate. So there are two things that we need to look at, even as we begin our discussion this morning, that we need to be innovative and we need to grow. Otherwise, we are going to vanish. And Moses did say that, at this particular moment when people are struggling with the issues of COVID-19, there are challenges that are coming. And these challenges will call upon each and every customer, each and every business person to be innovative on how you do your business and to grow so that you don't vanish. We don't want to have stories that, in the last years when we had COVID, 1, 2, 3 people vanished because they were not able to be innovative, they were not able to grow. So I want us to pick this, that what made you successful in the past, it won't today and won't in the future. So you need to innovate, you need to grow so that you don't vanish. Now you'll use what you have gone through in the past as springboards that help you to be innovative and also help you to grow. So I want us to agree as a team and as a people, as we move on, that we don't want to vanish, we want to grow. And for us to grow, we need to be innovative. So even as we go through the first session, which basically we'll be looking at personal finance and personal finance, we are saying that, yes, we want to be innovative even in our personal finance, even in as we move on and discuss about cash flow management, we want to be innovative and we want to grow lest we vanish. So personal finances impacts on all areas of life, all areas of life. And finances assist in reaching life goals. So as a business person, whenever you sit down, it is important to have your life goals. And see, we are being told that finances assist in reaching these life goals. So when you begin your business, when you start your big business, when you run your business, you need to have certain life goals. And the finances will help you to reach these life goals. So that's why when we're talking about personal finances, we are saying that it will impact on all areas of our life, all areas. And if you are picking notes, just underline the word all areas of life. Now, so what do we want to learn as we begin our discussion this morning? Now, number one, we want to look at the importance of personal finance management. Why must we have personal finance management as a business person? Then we'll talk about significance of money management and budgeting. Fellow business people, when we are talking about budgeting, it is critical. It is critical, and we want to see what is the significance of budgeting and even money management. And also, number three, we'll also be looking at how we create a personal budget. Creating a personal budget. You need to have a budget as you do all these things. Then number four, we look at the importance of savings and investments. And these are some of the things that even Coop Bank, who have brought us together, will be so much interested in how our savings are going on. What are the investment plans that we have? So the importance of savings and investment as a business person is important. Now, the other thing that we'll also be looking at, debt and debt management. How do we manage our debts? How do we manage our debts? That's something that we'll also be talking about. Then we'll look at business cash flow. Business cash flow. And when we reach in that particular session, which will be particularly session 2 of our presentation this morning, we'll be talking about business cash flow. Then sources of business funding, working capital. We'll also explore a number of sources of business funding. And one of them that we'll be also talking about is issues of acquiring loans. And when we talk about loans, we'll also explain it further. Remember, once you've acquired loan, is not a gift. You are supposed to repay it back for you to have a good credit record and even be able now to do business with your people who give you the money in the future. And for that matter, if you get the money from Coop Bank. Then we'll also be looking at effective cash flow management. Effective cash flow management, as we'll be proceeding towards the end. Now, as we begin, the question comes, then what is personal financial management? What is personal financial management? Now, it is the process of controlling your income and your expenses. Now, you need to look at what is your income, and this is the side we have the expenses. So the process of controlling, the process of balancing these two great things, income and expenses. So once we know how to balance this, then we'll be talking about personal financial management. What is your income vis-a-vis the expenses, the other side? And we'll see what are the benefits and what are we supposed to do so that we don't find that our expenses outdo our income. We'll also be able to appreciate that as we move on. Now, when you talk about income, there are a number of things that we need to think, a number of sources. There are many, but we have highlighted here around 5. Number one is employment, if you're working somewhere. Now, the money that you get, your salary, the wages that you receive can be a source of income. And number 2, the personal business profits. You have a business, and in that business, you have some profit that you that is accruing out of it. So that can also be a source of income. Then personal savings. Maybe you have been doing some savings. Now that can also be your income. Remember, you are doing your business, and sometimes there are things that you want to get, but you don't have money. You say, oh no, I've been keeping some money with Coop Bank. Let me rush there and get some savings there, then I can revamp my business. Number 4 is also dividends from various places where we do business with. We may have businesses. And number 4, which has also been coming, you know, it started like a small thing, but now it's becoming a big thing, merry-go-round, where people sit, you collect money, and you say that either weekly or daily or monthly we'll be giving people, we'll be giving the various members within this particular group, a group of members, we'll be giving them some little money as they do. So that can also be a source of your income. Now, once we have looked at the sources of income, and I've said that we have just highlighted 5, and they're quite a number. What about the expenses now? The expenses now. You have a business, maybe you are renting a house where you are having your business, maybe you're selling shoes, is a shop, is a mechanic, is a garage, is a place where wholesale. Now that place you are paying rent. That is an expense. That is an expense. We have food. Food is an expense. You need to eat. You need to have clothing. You need to look smart as you even appear before your customers. You need to look smart. So clothing that you have, you're paying school fees and other expenses. You have children, you have people whom you are supporting to pay school fees for, and or even you yourself, maybe you have gone back to school, you have gone back to college, you are doing some little course just to improve on your business. That will be also an expense. Medical is also an expense. And I want to challenge us that we need to look at how can we, because if you don't treat this aspect of medical well, again, plan well, as we do our personal financing, then medical can even eat into our profits and even eat into the money that is intended for business. The number 6 are the hobbies and entertainment. You'd want to go out, maybe just to relax. You after working hard, maybe you want to say that I want to sit somewhere and just enjoy. Remember, that is also an expense. And that's why we're talking about, remember when we started, we talked about income and expenses. So you have to balance these two. How much am I going to put for my entertainment? How much am I going to put in terms of entertaining the visitors who come along to visit me in my business? And balancing these two, your income and expense, is important as you continue with your plans. Now, when we talk about issues of budgeting, money management, so financial success begins with discipline and planning. Now, these two important things are important as we go into our discussion. Discipline and planning. Discipline and planning. You have to discipline yourself. If you don't discipline yourself, you are going to mess with the program, with your business. And also, you don't have a plan. How much do I need to put for this particular item? How much do I need to put for this one? And at what point do I need to go into this? And discipline comes into aspects of even planning, spending. How do I spend? How do I spend? So when we talk about a budget, we are talking about a detailed financial plan used to allocate money for a specific time period, and that reflects your goals. So a detailed financial plan, how are you, you have some money or you are expecting to get some money, how are you going to spend this money? So you need to create a budget to help you reach your goals. Remember, we mentioned that you need to have goals. And I know a number of us who are joined here, we have goals. And as the year begins, we make certain goals. We make certain goals that we want to achieve by the end of the year. So as you move on, your budget will help you to achieve these goals that you have created. So it is important to identify these goals and you know how you are going to achieve them. Now, you need to attach financial goals to personal goals. You have the personal goals that you want to achieve. Look at your financial goals also. Now, how do these two relate to each other? Your financial goals to personal goals. And that also calls for balancing. Remember balancing. Maybe your personal goals, you have so many goals vis-a-vis the other side where the financing part comes from. So you need to see, how do I balance this thing? Now, what you need to do, you need to determine your income, how much is coming in. And this, you can look at it, is it weekly? Is it monthly? Is it quarterly? So that one helps you as you think about the financial goal and personal goals. Now, you also need to determine your expenses, money out, money that you're spending. Remember the things that we had mentioned earlier in the previous slides about the expenses. So even in terms of expenses, there are those expenses that we incur weekly. There are those expenses that we incur monthly. There are those expenses that we incur quarterly or yearly. For example, you are in a rental place, and maybe your landlord or your landlady says that, you know, you'll be paying me quarterly. After every 3 months, you pay. There are those who say after every 1 month you pay. And the other things that you can even pay yearly. Now, in your financial goals, in your budgeting purposes, you need to put all these things. You need to identify those items that you need to pay weekly. You need to identify those that you need to pay monthly. You need to identify those that you need to pay quarterly and yearly. Now, you explain them well. Now, vis-a-vis the personal goals that you had created. Now, budget on a weekly, monthly, you can budget on this weekly, monthly, and quarterly basis. It will also help you to keep track on all spending. So you can check that whatever I had agreed to do within this week, have I done it? Now, did I go beyond what I had intended to go? Did I under budget in this? Now, it helps even as you move on to even review your plans. Now, you need to have controls and even prioritizing the spending. Remember, you are in a business, and sometimes business have challenges. And as you move along, when you have controls and also prioritize, because there are certain things that you can say that, no, this one, I'll be doing it weekly because of the needs and the priorities that I have and even the demands out there. So you prioritize those ones, and also can look at the items, the critical things that you need to prioritize to ensure that your business grows. For example, just if I may use this analogy, in a wedding setup, now there are those critical people who must be there. Number one, we need the bride and the groom, and we need the officiating minister. So these three people are a priority. They are critical that we must have them. So even in your business, as you plan and as you budget, when you're doing prioritization, remember, what are the critical things that I must attend to? What are the things that I must pay for me, for my business to move to the next level? Now, as you do this, remember to be honest. Be honest. As you plan and as you budget, you know yourself, you know how much you can get either weekly, monthly, quarterly, or yearly. So you need to be honest to yourself and be precise when creating this budget. It will help you. It will avoid situations where you start asking, now, what do I do? What do I do? So as we think about all this budgeting, and remember, it is important, budgeting makes you manage a number of things. And I invite my colleague Edward now to take us when we are talking about debt and debt management. Remember, we have had a good budget. We have had good plans. And we have discipline in ourselves, and planning there is good. So when it comes to issues of debt and debt management, how do you pick it up? Edward, come in.
Thank you very much, Christopher, for your good presentation. It has been very well. For debt and debt management is a very important topic for all businesses. So when we speak of debt, what are we saying exactly? This is normally money that you have borrowed from financial institution, or money that you have borrowed from different channels, financial channels that help run your business. So what has been a very big concern for small and medium enterprises has been the issue of interest. So whenever you borrow, for example, if you borrow from cooperative bank, they normally give you a loan and obviously give you terms associated with that loan, which normally reflect the interest. So that could be one definition or one difference between your debt and secondly, your expenses. When we speak about your expenses, this normally include bills and everything that comes as money going out to pay for your smooth operations of your business. Christopher, could you turn off the slide? So normally, when we speak about loan, in a layman's language, it's a large debt that is paid in small amounts over a period of time and definitely has an interest added to that payment. And that interest normally is the cost of borrowing. Every time you borrow from a financial institution, the financial institution always has to get back something in terms of their commissions, which is normally called their interest. So what we say, an interest normally is an extra, is an extra amount that the business gets. Now, when we speak about your net worth as a business, we normally take your total assets and then we subtract your total assets from your total liabilities. Then you're able to know the worth of your business at that particular time. And so I know for most of you know what your assets are. Your liabilities, obviously, are things like loans, etc. So when you want to define your assets are normally things that you own, things like furniture, inventory, things like that, your receivables. When you speak about your liabilities, this is an obligation to pay what you owe. For example, what you owe in terms of if you've taken a home loan, if you've taken a car loan, if you've taken any form of loan from the business, then it becomes your liability. Your net worth, obviously, is the amount of money that you get after subtracting your total assets from your total liabilities. The amount of money that is yours after paying off all debt, that becomes your net worth. So warning signs that you're getting into debt. First of all, these warning signs are very important for you to be able to understand. And what we say, the first warning sign is your difficulty in paying bills on time. The other one is living in your overdraft or credit line, which means you're living beyond what you're borrowing. The other warning sign is always spending more than your income, which is very dangerous, especially for small and medium enterprise businesses. And the other warning sign is that you have no budget in place or you have no spending plan in place. So when you don't have a budget in place, it becomes extremely difficult. So what are your steps of getting out of debt? Number one, do not create additional debt. Let us leave it where it is. The other thing is once you borrow, prioritize your debt. Make sure that I've gotten money from a financial institution, and this is the reason why I'm borrowing that money, and therefore I will use that money for the purposes in which it was intended. The other thing is pay off the smallest amount or the amount with the largest interest first. So you have loans that you have borrowed from financial institutions that have higher interest bearing. Start with those ones that have a higher interest bearing first. Then you come to the other small ones. The other one is take the extra cash from a paid off debt and apply it to the next debt in your priority list. Means you already taken a loan and you've already paid that loan. Now what you want is now you want to take the extra cash that you have made from your profits and you start on the next debt by way of priority. So that is very important, because what we are seeing is people have already multiple loans and they must be able to prioritize. Now that we are making profits, that we first of all pay the one that has the largest interest bearing. After paying the loan with the highest interest bearing, now come and start also paying this other loan so that you get out of debt. The other one obviously is very simple, is you must make cuts to reduce your spending. You must look at where else you're having, spending, or what we call extravagant spending, and cut on costs so that you're able to pay your debts. The last one is pay down your balances. Means you may have something else that you're doing on the side, and you may be making some little extra money from the side that you can use to pay off your debt. So we encourage people, if you have what we call in layman's language side hustle, you can use part of that finance to pay off. The other one is before we start anything, you must be able to look at the potential terms and conditions before getting credit from any form of lender or any financial institution. And then the other one is obviously do not abuse the privilege that any financial institution has given you. Maybe Cooperative Bank has given you a good credit line. Please take care of that. And then obviously avoid taking more debt. So these are things. I think we need to go to the next slide, Chris. We have already spoken about some of these things. So the issue of saving and investment, I think everybody is quite aware. Because of the externalities that we are having, like COVID, it's very important for us to start saving now for a bad day. Put away funds for short-term goals and emergency, very important. And then the rule of the thumb, having at least 5 months income saved for emergencies. Now I know that we are already in a pandemic session. If you had saved for 5 months and the externality is going for another almost 2 years, what do you do? These are things we are going to discuss as we move back, as we move on. Then the other thing is have some small savings in the bank. Somebody's asking, Zipora Mumbua Mutinda is asking that we go back to the slide of getting out of debt. Maybe you can go there. Yes, do you have a question? Zipora, do you have a question on that specifically, or you just want to look at the slide?
Yeah, Edward, maybe Zipporah may not be able to say it, but I have seen her comments, and she has also asked that we share the slides on email after this great presentation. So we will also share to all the participants who have joined. So don't worry, for those who are making notes, just in case you miss on something, we'll be able to share these slides with you. So thank you. Thank you.
All right, let us move on. So why do we need to invest and save? Obviously, it protects you in the event of financial emergency. And then saving money helps you in getting large stock. It also helps you avoid debt and helps you reduce your financial stress. And then the last one is provides you with a greater sense of financial freedom. So those are basically the reasons why you'd always want to save. Very important. So let us look at the second session, which I think is the session that most people would want to hear, which is business cash flow management. Let us continue, Chris. So we will discuss the importance of effectively managing cash flow for your business. And then we'll look at the strategies to help manage payables and receivables, and we'll be able to explain to you what those two terms mean. And then we'll look at the budgeting tips to help you take control of your business cash flow and how to help streamline the cash flow process by using online tools. A very important question that is being asked today by small businesses is, what is business cash flow management? It's a very simple terminology, but because of the semantics, it looks to be complicated, and it means the process of tracking how much money is coming into and out of your business. Just that, let us keep it at that simplicity. The money that comes into and out of your business is the essence of business cash flow management. So small business cash flow management, small business cash flow management. So what we mean, cash flow management includes, number one, you must be able to understand your business reserves. What do you mean by business reserves? You must be able to understand the abilities of your businesses to retain money, to be able to control money, and to be able to let money out. Number two, you must be able to manage your business reserves forecast. You must be able to forecast your money. You must be able to know where I will put the business money. Will I add it in stock? Will I pay people? Will I pay suppliers? So you must be able to come up with a very good forecast for your business and put aside money for that. And then number three is that you must maintain your financial statement. Your financial statements are normally three. We have the balance sheet, we have the income statement, and you have your income, and you have your cash flow statements. You must be able to integrate these three statements in your business so that you may be able to understand your cash flow very well. Let us continue. So managing receivables. What are receivables? Receivables is your cash in. When we speak about receivables, this is your cash in. So how do you manage your cash in? Number one is documentation. You must always be able to invoice often, and that must be done extremely accurately. The other area that we are having a problem is collect part of your payment upfront. Sometimes you enter into business and you start negotiating for a 50% payout. Because when you do not start collecting some of your payments in advance, there's always a problem sometimes in being paid your whole amount. The other thing is you must set your payment terms. You must set your payment terms and you must enforce them. That is so important. And then the last one is that you must go for all your money. You must at least be able to follow all your debtors and tell them that they need to pay up. So go after all your receivables. Let us move out. Managing payables. Payables is cash out. So your strategies to help control your spending will be, number one is manage your expenses. Do not overspend. Always keep your expenditure at a level that you can control. The other thing that we have seen is that you must be able to control all kinds of purchases, because there are some purchases which you yourself you have not authorized, but you want to purchase them, especially when it comes to assets. That one must be able to be controlled. The other one is you must be able to diversify or stretch out your payments, and especially to your suppliers, and especially to the people that you owe money. You must be able to stretch out your payments, which could include even bank loans. You must be able to start spreading out your money so that you are able to cover. You remember the issue of debt, so that you may be able now to start covering some of those debts. That is part of managing payables. The other one is you must always double check your invoices. This is a problem we have seen with suppliers, because people will supply you with goods and then they give you the first invoice, and then somehow that invoice gets lost, and then they give you another inflated invoice. So you must always double check and document. We always advise small businesses to open files, to document receipts, all form of receipts where possible. It's just that even sometimes we don't have receipts for logistics like transport, but always document. Let us move ahead. How to track your cash flows. So cash in and cash out should be extremely kept simple. And this is what we are saying about documentation. Always record the dates of all your cash payables. Cash receivables. You must also record the dates of all your cash payables, which is your cash outflows. And then you must always notice if there's a pattern in both. Sometimes they're imbalances. Sometimes if you look at your cash payables, which is your cash outflows, there will always be an anomaly. And that is what should be able now, once you keep those records, you should be able now to see where the anomaly is, whether what your cash receivables could be lower than your cash payables, then that is where you start raising a red flag. Then you must come up with a tracking system to track your cash flows moving forward and to keep your statements up to date. Please, we are asking, and this is now the problem of MSMEs, keeping your statements up to date. Let us keep our statements up to date so that we know if, for example, you have borrowed from a financial institution, you know this is the time and this is the money I have. And if you have a shortfall, like now we had a shortfall because of the externality that we are receiving, which is COVID, go and speak with your financial institution in advance so that at least they are in the know. Don't keep quiet. Don't just stay there. This thing of keeping quiet has been a problem in managing cash inflows and cash outflows. Let us continue. So 3 important statements that help you in managing cash flow. Number 1, and we are encouraging, at least there are very simple ways to be able to come up with a balance sheet, which obviously highlights your assets and liabilities. Number 2 is your profit statement or your income, your profit and loss statement, which is your income statement, which obviously highlights your expenditures. It highlights the money that is coming into your business. And then it always tells you your profit situation or your profit position, whether you're in the negative or whether you're in the positive. And then number 3 is your cash flow statement, which always gives you a position of your business, whether it's positive, whether you're making profit, or it's negative, whether you're making losses. So forecasting your cash flow, keep an eye on the bigger picture. When we speak about the bigger picture, keep an eye on your cash inflows and your cash outflows very keenly. Know your company's infrastructure. When we speak about your infrastructure, you must look at your internal processes, look at what you need, what you do not need. Are you in technology? Do you need technology? Do you need expertise? Do you need reskilling? Do you need retooling? Have the right banking structure, like cooperative bank, people who are able to listen to you. Go and speak to them, look at the products that they offer, see which products fit your businesses. Classify and label bank accounts, because we have seen that most people in MSMEs are mixing their personal account with their business account. Always differentiate between your business account and your personal accounts. Then establish very clear accountability across your organization. Those accountability systems are very important. Who reports where? Do you have your human resources in place? How many employees? Is it sole proprietorship? Is it, business structure? So you have an accountability across your organization, which we normally call forms of business organization. Is it a sole proprietor? Are you alone in that business? Are you in a partnership? This must be very important for you to be able to understand how you're interacting with your cash flows, how you're interacting with your expenses. Because if you're in a partnership, then you may need to ask your partner when it comes to spending. Or if you're in a limited company, it may be inherent for you to be able to ask your team whether you people are to be able to access loan to be able to upscale your business or your business product. So these things are very important. Let's move on. So cash flow management includes, number 1, you must, this one we have done, I think. Let us move ahead. We have already covered this. Very good. The importance of cash flow management in your business. What is the importance of this cash flow that we are speaking about? Number one, it will help you predict how much money will be available to your business. It will help you predict how much money will be available to your business, and that is very important. Number two, it also helps you identify how much money your business needs to cover debts, like paying employees and suppliers, and this is very important. So we are saying that 82% of businesses fail because of poor management of cash flows. This is according to a US bank. Let us move on. Strategies of improving your business cash flow. Number one is by increasing the amount of incoming money. And number two is by reducing the amount of outgoing money. So it's very important for you to be able to assess those two. So now we are going to look at some of the sources for financing medium and small business enterprises. This is very important. So the first one is equity. Equity normally, when we speak about equity, this is money or capital contributed by owners, capital sources that trade cash for some portion of ownership or equity in a business. So you find that you don't have enough money, and therefore someone comes and buys part of your business and gives you money. That is called equity. But you see, equity has its limitations these days because sometimes you want money that is readily available and you're not getting the money. So we go for something called debt financing, or what we are calling debt sources. And this is what is very common with most businesses, which includes sources of funding that require money borrowed to be paid back with some interest. So if you go to a financial institution and borrow, that is debt financing. That is money that you borrow from the bank. Whenever you borrow money from the bank, that is debt because it always has an interest of payment. The other one, which is becoming very popular, is partnership with people, with other companies that have similar goods. Then obviously your family and friends. People have been able to start up businesses through that. Then private investors. This is becoming very common, especially wealthy individuals functioning, HNIs, high net worth individuals who are able to give you money, who are being called private investors. If you have a good idea, if you have a going concern that looks to be very profitable, these people come and pump money there. So these are effective cash flow management strategies for SMEs. What are these effective cash flow management strategies? Number one, always ask for a deposit or milestone payments. Learn to ask clients for a deposit or upfront payments, more so when the product or services require a substantial amount of money. This is always ask for a down payment of about 50%, especially when you're dealing with money that is a lot. Always ask customers to pay faster. Persuade, the word here is persuade customers to pay faster by giving client discounts. This is very important. And this is all about how you build your relationship with your customers and how you set terms and conditions for them. Let us move on. Cut or delay expenses. If you are in a manufacturing company, so what we are saying, manufacturing companies may have lower cost of inputs to deliver the same goods or service, while a service company may opt for spending less time on the same work. So always cut or delay expenses. Companies should also consider exhausting existing inventory. Before you bring in new inventory, always consider exhausting what you have before purchasing new inventory or hiring part-time or contract employees to replace full-time employees. Let us move on. So always request for more favorable payment terms from your supplier. This is very important. Getting an extra 15 days or 1 month to make a payments can make a big change. If your payment terms are 15 days, you could always ask for 30 days. If they are 30 days, you could always ask for 45 days. And this can be done by creating good to better relationship with your suppliers. So once you start making yourself clear with your suppliers, that please understand, especially people who are in the chicken business, then they'll always look into your area. The other one is increase margins. Increasing its margins will help a business spin off more cash that can be used to fund operations. There are only two ways of increasing business margins. One, by increasing prices, increasing changes in prices. And number two is by decreasing the cost to deliver the product or service. So when you increase price for a business with strong demand for a product, this gives you a unique advantage, and it gives you a better value proposition for your businesses that is not available from your competitors. So sometimes people want to either decrease their prices to give them a competitive edge against a very competing business where they are homogeneous products. Homogeneous products means they are similar products, or there's very close competition. So your value proposition in this case will be maybe to decrease your price, or maybe to increase your standard product so that you may increase your price in your product. So if you offer quality goods, you could now have a value proposition of standard by giving quality products and increasing slightly your price to give an advantage. Let us continue. The other thing is always lease idle equipment. Don't buy. If there's always an opportunity for you to get equipment from suppliers, always lease it. This one helps you to release some of the cash that you'd have used to buy new equipment. So very good. The other thing is sell invoicing. How do you sell your invoices? Or what we are normally calling invoice factoring, invoice discounting, or invoice financing. So just go back to that slide, please. So supposing you give a product or you give a service, and the people you're giving your product or service decide to give you an invoice. Remember, invoices they tell you don't invoice until maybe after 15 or 30 days. These ones hold your cash. So you must be able to look at how you can discount that invoice. Instead of waiting, for example, for 60 days for the client to pay, a company can sell the invoice to a factoring company and get money upfront. And it's normally, I think, 10%. So don't stay with your invoice for 60 days. That is holding money. You can go and do invoice factoring. Let us continue. Another thing is you can postpone work, shift, or turn down. Sometimes you may be given business which you are not able to handle. So the best thing is you can turn it down if you know you don't have the capacity, you don't have the capabilities, you don't have the skill, or you don't have the tools. Or you can postpone that work until you are able to get partners who are able to partner with you, and you are able to deliver. A case in point has been for the people who are in construction. You go to the county, you're given an infrastructure project, you don't have the skills, you don't have the capabilities, you don't have the capacity. You can negotiate for postponement until you get the right tools, until you get the right personnel, until you get the right skills, or until you get financing. And it is allowed in business. If you go and renegotiate and tell them to give you more time for a project, they are able to listen to you. Let us continue. So cash flow management for small businesses, cash flow for any business, now that it's like almost a recap, can be referred to as the cash that circulates in a business. That is cash inflows, cash coming into the business through sales, cash coming into the business through loans from financial institution, or the sale of assets within the business. Then your cash outflows will be those cash payments through payments for normal business operations, such as supplier payments, and very importantly, loan repayments. This is the area that we need to make our SMEs understand that this is a very important part of the business, which is loan repayment. Remember, the better you build your credibility with financial institutions, the more sustainable your business will become. So it's very important for us to be able to look at the part of loan repayment, so that next time this financial institution can be able to give you another loan to scale up your business. Let us continue. So cash flow, this is a continuation. In order to effectively understand how much money the business is making, we need to first and foremost maintain records. Remember, I spoke about receipts, invoices, your cash inflows, your cash discounting, and so on and so forth. Monies that are received in the business must be recorded on a daily business. And this is something that we have noticed that small businesses are not doing. You're not recording all your transactions. And that is where the problem is. If you do not have proper records, how do you get loans? If you do not have proper records in your business, how are you able to know whether the business health is good, whether you're positive or negative? So please, let us start having a culture of recording business transactions. Let us continue. The other thing is the last point. The activities are important in monitoring your cash inflows and your cash outflows of all your business transactions. Let's continue. So once the business is able to understand its inflow and outflows, then it can embark on managing these inflows and outflows very effectively. Once you understand how your money is coming in and how your money is going out, it becomes easy. The second most important aspect in business cash flow management is to ensure that the business operates a separate bank account and pay bill, different from that of the business owners. Until now, there are very few people who have been able to separate those two. And that is a very big conflict. So money received from sales will be deposited into this account and payments made from the same kitty. So whatever money you make from sales should be able to go to a separate account. Very key in cash flow management is collect.
Edward, we lost you. Check if you're muted.
Sorry. So we are saying very key in cash flow management is collecting your cash or sales revenue as early as possible. And make sure that there is no delay in collecting this sales revenue. The other thing that is very important is that a business can use several models or methods in ensuring that it obtains its money from customers at the earliest. When we speak about several models or methods, it's like when you tell your customers to give you an upfront of about 50%, then there's always a commitment from that client. The other very important thing is your loan repayments and payments with suppliers. This is so important, we cannot re-emphasize. Should be made in a way that avoids paying additional interest or incurring unnecessary interest as a result of non-payment. And this is a very big barrier to business. You people must be able to pay your loans in time so that you do not get additional interest or incurring unnecessary interest as a result of non-payment of loans. This one we have emphasized. We have spoken to MSMEs that are getting stuck, and it's not because they are not able to pay, but because they are not able to keep their records well. Thank you very much for that. Back to you.
Thank you, Edward. I'll invite Peter now to take us to the next level as we go towards finishing our presentations. Yes.
Thank you so much, Chris. Thank you so much, Edward, for the great presentation that you've had, and especially on the personal finance, and also linking it to the business cash flows. And I think one of the things we have realized is that even as we take the loan facilities, as we continue to, add stock, maybe using the facilities that we take from the bank, that we need to ensure that we have good records, and we need to ensure that there is some level of discipline in terms of how we use these monies. Thank you so much again for that presentation. I can see questions coming, and I think majority are asking whether we're going to share these slides and also whether we're going to share this recording. Yes, I can confirm that as our norm, we always share these slides and the recording after the session. So we will be sharing this, and I'm sure you'll get more details. And because of time, I know we've been rushing even the presenters, but I'm happy that we've been able to cover quite a number of information. And remember what Chris said. Chris said that for us to survive, we have to do something. There must be some level of discipline. We don't want to say that I used to have business. And one of the things that I have realized in business, they don't actually fall because there are no profits, but because of maybe some of these insights that we have shared, they may not have come across them. And so I want to appreciate you, our customers, because investing that 1.5 hours, I think you'll be able to, acquire quite a number of insights. So I think because of time, I will just briefly go to saying what do we give in terms of the bank. And this is a conversation that we have had before on the MSME packages that we have. And I'll be very brief because I know some of the customers who are attending this, you already have these solutions, and possibly you have also had this training before. So I will be brief on this because it links to what Chris and what Edward have already trained to say, then how do the bank come in? And one of the ways that the bank come in is to say, initially we used to give you an account. We used to have just an account. And what we have now agreed to say is to give you a package, an account that we call a package. And this is well designed for any business customer, depending with where you are, the level that you are in. And we want to take your business to the next level, but we want you to have a solution that that will address all the needs that you have. And that is how we designed the bronze package, the silver package, and the gold package, depending with the level we are. And they, of course, for those who are starting and those businesses that are a bit young, that's where they fall in bronze. And for those that, again, now they are in another level, they have already taken off, we are giving you a solution called the silver package. And now when you go up there to the medium segment, and now you're looking for maybe even expanding in terms of additional branches and maybe going out of the country, we are giving you a gold package. And these have the solutions within them. So going to the benefits, I'll be brief because I know we have talked about them before. These package accounts are cheap and they are less costly, and they are tailor-made. They are specific for business customers, and they offer business solutions under one bundle, as I have just highlighted. And you can also see that they are easy to access business loans. I think one of the challenges that we experienced before is to say it was not easy to acquire facilities. And remember, we didn't used to have the mobile facilities that you were able to access easily using your mobile phones. Up to 1 million, you are able to get it because we have these MSME packages. And I think the other thing you have also noticed is that we have dedicated relationship managers and a dedicated team that support you in terms of the needs that you have down there if you are in these packages. And the last and not the least is to say, one of the things we are doing right now, the trainings that we are giving you is what we are calling free non-financial benefits. So the solutions to train you to make sure that you are equipped and you have information, because you can get the money, but if you don't have this information and the insights, then you may not be able to grow and you may not be able to survive in your businesses. going forward is to say some of the things that then they come with these packages that we're talking about. Yeah, I've already talked about payment and account management, that you're able to even track and pay your suppliers using your mobile phone online and pay your bills, do bank-to-bank transfers using at the comfort of your place. So say that it comes with an account management and payment solution. Again, number two is to say that you are able to get some M collection solutions. You realize initially there was only one way maybe to be paid. You used to be paid maybe on cash, but then we are now diversifying our collection solutions. You have the Lipa na M-Pesa, you can terminate it this to go bank. You have these packages. Of course, these packages comes with the PDQs and the e-commerce platforms that we have and the M collection solution to make sure that then you are paid right on time and you are paid with all the channels that are available. Proceeding is to say that one of the solutions that again these packages have is the bank assurance, or rather the insurance solutions that we have as a bank. Initially, you had an accident and you collapse and you are the owner of the business. That would be the end of this business. But I think as a bank, we are very deliberate to say we want your business to continue. And that's why we have brought the insurance component into these MSME packages. In case of maybe an accident and you are not able to continue with the business, this package will help you. Depending with where you sit, there is a limit that you're able to get from the insurance. We're able to claim for you and your business is able to proceed on, even if you're not there directly. Again, of course, we've talked about the business loans that you're able to acquire. There is unsecured facilities. And for the MSMEs packages, you have a limit of up to 10 million Kenya shillings, depending again on how you are banking, how your cash flows are and the way they are terminated into our accounts. So it's a package that again comes with a lot of benefits in terms of the loans. Going to the last maybe part of the slides is again to say that yes, you're able to get the term loans to continue to increase your working capital, because again, as I said, business don't go down because of profit, but working capital solutions, getting money to add stock, getting an overdraft, getting an instant mobile loan, I think it supports you to supply maybe even where you want to. So it's a solution that have, again, a working capital solution for you. Lastly is to say that in business, you need mobility. And as you have seen, as a bank, we have come out very, very strongly to support you in business in terms of taking your goods from one place to the other, supplying. So we're able to give you the lorries, the trucks, the pickups, the personal vehicles to help you in mobility. And of course, we have the farm machinery, we have the medical equipment, and the factory machines. Again, also being supported by these MSME packages. And this is easy because we only need to look at your account turnovers, and we're able to design a product and we're able to give you a solution based on how you're banking. And so just to ask ourselves to get more details on these MSME packages. If you don't have it, you are not in bronze, silver, or gold, then possibly you are losing an opportunity. So this is just brief. I think that's what I had, Chris, just to say, compliment on what you have trained us today on managing our cash flows, and the business cash flows, and the personal cash flows. We come in to support you, and we support you both in terms of finances and in terms of non-finance services that we actually doing today. So I want to really appreciate you. I know there are questions already. There are questions that are already being asked, and possibly this would be a good session for us to attempt to answer some of these questions that have come in. So if you allow, Chris, maybe I will, because of time, I will read some of the questions that have been asked by customers. And I'm sure we'll be able to address them. And those who will not be able to address, then we still have an opportunity to engage later. So I think Ibrahim Mohammed has already asked something. Kindly share the contacts of the presenters and expand the debate through the chat. I think Ibrahim is saying that he's finding it very, very useful, and he would want us to get more details maybe after that. So we'll be able to share the contacts after this. There's a question here for you. I think this would be Chris from Geoffrey. He's asking, for instance, is it worth to save on personal account or business account to get loan? So you could answer that. And maybe as you do that, I want to add another question that was coming from Anthony Cura. He's saying he's a sole proprietor when he saved like 200,000, and sometimes he gets orders that are above the 200,000. He finds himself every time the savings that he had to remove that cash and maybe used in buying the goods. He's asking, what should I be able to do? Should I be having a separate account for savings that I should not use? Maybe you'd want to answer that first. Then I will be coming back to say what are other questions. So I think Jacqueline is saying, I do enjoy all the services of the bank, but I have been denied a loan and not very good ground. Possibly, Jacqueline, we want to, and this I will pick it. I would want to engage you further after this session to know what is that criteria that you possibly missed and what do we need to do. Because I think for us, we want to understand your model first before we give you the facilities. And then there's a good question here that has just come from Dana. We know he's just asking, how do you know the account package, whether you're in bronze or silver or even gold? And as I said, when you go to the branch and you are in business, the account that they should open for you is either in bronze, silver, or gold. It's a current account that has several functionalities and several benefits. So yeah, so we'll be able to support you if you go to the branch, and of course I will get in touch with you after this. So I think for the two questions that I had raised, Chris, you want to handle as we look for other questions. Thank you.
Thank you, Peter. I'll invite Edward to respond as he picks on even the other one. Edward, are you there?
Yes.
Yes.
I will start by the question on, do I save on a personal account or do I save on a business account? I think it's very clear. When you're in business, it's always good to open an account for a business so that you're able to separate your business money and your own personal money. Even when you're doing your balance sheet, this is something that you will realize. There's always owner's capital and there's always business capital. So from where I sit, and even if you are to talk with a bank, they'll always encourage you to have a business account. And when you have a business account, they will give you the details of how to open a business account, but it helps you monitor the amount of money that your business is making and how much more. And it also gives you credibility. If you want to take a facility with a financial institution, they'll not always want to look at your personal account. It is very credible if you have your own personal, your own business account. For the second question of 200K, that is a very good question. And that is the question that I think Peter is trying to address with the 3 accounts. Whenever you find that you have 200,000 shillings and you're now getting commodities that require you now to start eating on your savings, it's always very good to have a relationship with the bank. That is why the bank always has a position called business relationship. Once you have a relationship with the bank, they can always either give you an overdraft or they can give you a small loan where you can now go and purchase and leave your savings alone, because we have said the savings is for a rainy day. So I encourage that client, he asked a very good question, develop the relationship with your banking partners. And this has always been the case with most businesses, because it's not only small businesses, but big business. You'll find that sometimes you need to buy things that are beyond the money you have and you're not able to. But if you have a good relationship with your bank, they can be able to understand you and be able to extend a facility that will be able now to help you get whatever you want. Thank you very much.
Thank you so much, Edward. Maybe 2 more questions. questions. This is from Gilmer Agencies. Is an overdraft from financial institution a source for financing? And I think you can also attempt that, Edward, as I also read this one from Frecia Minor.
Okay.
She's saying, I didn't understand the issue of invoicing. I think it's
invoice discounting.
Yes, I think it's on the point number 8 that you had indicated.
Yeah,
maybe you can go fast.
Yes, the first question, can you repeat the first question, please?
Sorry. Is an overdraft from financial institution a source of financing?
Okay. Okay, very good. First of all, what is a bank overdraft? I think you must understand a bank overdraft is a facility that is extended to a going concern, means you're already in business. When we speak about sources of business financing, we normally speak about sources of business finances, especially when you're starting your business. But an overdraft is another source that helps you scale your operations. It helps you scale operations for your business, means you're already in business. Sources of finance are those sources when you're starting business, normally. But it is also a source of finance for a going concern. Thank you very much. The second question on invoice discounting is a very good question. What is happening today, and I've seen especially with suppliers of eggs, is if you are supplying an institution like KCB, like Cooperative Bank, you're supplying eggs to them and they give you a check for 60 days. And you know, for your small poultry business, hii kuku inakula tu chakula, so you need money constantly. But this check can only be cashed after 60 days. What you do is you do an invoice discount. Means there are companies, even there are small circles, unapeleka hiyo invoice yako kwao, they take a small fee, a small commission of maybe 3,000 or 4,000, and they give you the money. This is normally done for checks that have a long period of payment. So don't say it with your check, una complain, unasema, oh, this company said that I must now go and cash in my invoice after 60 days. That one will kill your business. Look for these invoice discounting companies. Cooperative Bank can be able to give you some of these ideas on where you can do your invoice discount. I think they might have that facility. Peter is yet to confirm, where you just take the check to them. They take a small fee of maybe 1,000, 2,000, and then they give you the rest of the money. Thank you very much.
Thank you, Edward. I think there's one here from Karani Jage. He's asking, kindly recap on having a separate accounts for business. I think you had talked about a separate account for business. Maybe you want to mention something regarding the same. I will handle another one here that has come from Enoch Bosire, that the hindrance has always been the issue of providing collateral. What opinion are available, options that are available when the business has no security to give? So I'll handle that as you handle the one for the business.
Okay, thank you very much. Thank you very much, Peter. The issue of having businesses, different business account, is a relatively new concept, because you are having the issue of business diversification, where you have, for example, a small medium enterprise is operating 3 or 4 different businesses. On one hand, they have an M-Pesa shop. Another one, they are selling phones. And then another one, they are doing this cash for banks like Cooperative, etc. So what we are saying, how do you know the money of your M-Pesa and your phone business, if it's mixed in one account, it normally has a problem for you understanding your cash flows. So what we are encouraging small businesses, try and operate separate business accounts for your different businesses. Utapata mtu ako na maziwa, ako na mayai, etc. So when you mix these two, you're not able to know of the 2 businesses, which one is which is giving you negative returns. So we always encourage you to have 3 different business accounts for your business. And we have seen this with M-Pesa shops. M-Pesa shops are bringing a lot of confusion because you're not able to separate your general shop and your M-Pesa. So it's always good to ufungue account ya M-Pesa na uache ingine, so that it can now help you manage your cash flows. Thank you very much.
Thank you, Edward. In case you had open partnership account, do you close it to open these MSME packages? There's also another question that you had asked. If you had maybe a partnership account, do you close it so that you can have the other account? I'll add that together with the one that Bosita had asked on the collateral. Now, I think what we are saying on our MSME packages is that one of the gaps or the challenges that we experienced is, issue of the security. And that is why we have even come out very strongly on our e-credit for business people. So what we are saying is that if you are banking well, the system is able actually to identify where you fall. It's able to give you a limit. It's able to score you, depending on how you're also paying your facilities and other obligations that you have. So the account, in your account, this MSME package has an engine that is able to identify you and know where it is going to score you and give you a limit. And that's why some of our customers who are actually attending this webinar, they are already, taking advantage of the MSME e-credit that we have. And that is what we are saying. Let's open these accounts. Let's ensure that all the cash flows are coming through these accounts. Let's ensure that all the other obligations you have in terms of loan payments are done, and you can see your limit continue to increase. There are people who've started with limits of 50,000, and now you actually be able to get 1 million Kenya shillings in terms of the mobile loan. So it's an opportunity for us maybe to take advantage of these solutions. Again, even as you go to the branch, you're able to disclose all your business needs and how the model works. And again, they are able to prescribe a solution that they can give you. You may realize you may not even necessarily be looking forward for a loan. You might actually be looking for an assets, and they are able to guide you. So please, I want to reiterate on the point that Edward has talked about: relationship management. Have a very, very good close relationship with your business banker on the ground, because they will understand you and they'll be telling you this is what you can actually be able to benefit in terms of the solutions we have. I think for Dan, in case you had another account, you close, not necessarily, it depends. If you are two and you want to continue maybe saving with that particular one, it depends with what purpose it used to be for. If it was a business that was formed as with 2 partners or 3 partners, then you continue. There are accounts that you actually don't need to change the account number. It will not change from the back, and we migrate you to be the MSME packages. So again, an issue of liaising with your manager or your relationship person to guide you. So if it is an account, as a business account that you had, it can actually be an account that can be migrated, or you may need to open another account still jointly, and you continue to bank with that particular account. So maybe a few more questions. I can see time is also not really on our side, but I know we are almost there. Good. There's a question here coming also from Benson Mwangi. Can I use a financial statement from another institution to a certain status or eligibility for a loan, e.g. M-Pesa? What I would say is yes. Possibly it depends also with what you are looking for. If it is an asset finance, very easy for us to use other statements, but we encourage that you have an account. Even if you have say a Lipa na M-Pesa, let that money be terminated to us. Let you just have that functionality to terminate that money to us, because it becomes very easy for us to really identify, understand you. I think maybe the last question here: who qualifies to be the package, and what qualifiers? This is coming from Moses Omondi, who qualifies to be the next package. I think, as I said, is any business customer who is looking forward to grow in business. And yeah, I think there are benefits that I had highlighted there. Good. There's a question here from Charles Mumbi. Does Coop Bank assist customers collect debts from suppliers. I think this is an interesting one, maybe something we may need to think about. But I think just to say again is to also, as you deal with your suppliers or your debtors out there, please understand them. So I think that is what I would encourage, that know who you also give credit, because even when you come to the bank, we also try to understand you. We want to know you before we even give you money. So also ensure that you also know you are the people you also give credit, and also know the limits, because you don't want to expose yourself to to that customer who you are not very sure whether they will pay. So I think there are quite a number of questions that are also coming, and looking at time and going to the next slide, and I know Moses also is in the session. I want to ask Moses, possibly as we close, Moses, maybe you could come up and maybe highlight anything that we could have left. There are questions that we'll be able to answer after this session, and of course we will share this material with you to get further details, and we are ready to support you get out of maybe challenges that you have in cash flows. Moses, if you can hear me, you could come in as you do the call to action, and as you maybe give the closing remarks. And before then, maybe before Moses you come, Chris, do you have any parting comments? And Edward?
Yes. No, me, I have none.
Okay.
Thank you, Peter. Just once more, I just want to thank the participants and the COP for this opportunity, and I want to encourage them, just as we have learned, let's plan, let's work well, and we'll be there. And we are ready to support you. As I've said, we do mentorship, we do capacity building to various business issues. So please get in touch. We can work together in this work. Thank you.
Thank you so much, Chris. Moses?
Yeah, thank you, Peter. Thank you, Christopher and Edward, also for that good, the good insights that you've given to our customers. I believe we have picked one or two things for our customers, and just as Christopher has said, let's ensure that we implement what we've learned from this webinar. As my parting shot, I would want to put two things across. Number one, and I think it is kept on coming through Edward and Christopher, is that your business sustainability and growth will not be determined by the profits you make out of that business, but it will be determined by the ability to have to continuously generate cash flows. I think that's very critical. I would want to repeat that to say your business sustainability and growth is not determined by the profits you make out of that business. It's determined by the ability to have sustainable cash flows. And I think basically that is what we are talking of today. The ability to have cash coming in and out of your business. But more importantly is that the cash that is coming in. And if you have more cash coming in than what is flowing out, it means then you are in business. And I think the biggest killer, the biggest problem with businesses, including institutions, big institutions, is lack of what? Lack of cash flows. I think that is very critical, including big institutions. You not hear a bank that was closed because of not making profits, or it's because they didn't have adequate cash flows. You not hear a supermarket that was closed because they didn't have they were not making profits. It's because they didn't have adequate cash flows, and that also applies to the small businesses. So if your business has to survive, you have to ensure that you are generating and correcting your cash, and that's what brought in the issue of debt collection. I think I had Christopher and Edward emphasize on that very much. My second point, which I think is again critical, I've had Peter talk about it, is that a banker-customer relationship is more or less like a doctor-patient relationship. And for you as a business customer, the ambassador, the person who represents you in the bank in terms of the discussions, the person who understands you is your branch manager, is your banker on the ground, your relationship manager. That is a person that you need to really keep close to, so that they represent you in terms of the understanding. Because for me and Peter sitting at head office, or even for our colleagues who sit at head office and do want to make credit decisions, they will be guided by what you present to your banker or to your branch manager. So my request is to ask my customers, keep close to your branch managers, keep close to your business bankers, the relationship managers, so that we nurture that relationship and we have a clear understanding of you so that we are able to support you. So the business banker, the branch manager should be able to know, where does your money come from? Where does that money go out to when you are doing payments? I think finally is to say, to really thank our customers. And I want to take this opportunity to invite those who are not banking with us. I know we have a number that are not banking with us. I would want to take this opportunity to invite you to patronize a cooperative bank, visit our branches to open a package account. I think Peter was very clear in terms of the kind of accounts that you're looking for. For those who are banking with us, I thank you also for that. And I would want you to really push in terms of the more engagements with the branches to ensure that we take your business to the next level, just as Peter said. I think then in terms of call to action is basically what I said. Engage your business banker, the branch manager, for more details on cash flow management and MSME packages. I think the discussion we have had today is actually readily available in the branch network, and our branch managers and relationship manager will be able to advise you on the way forward. Continuously bank and present your business financial needs to your branch. I think I've talked of that, especially for those who are banking, and I would want to invite those who are not with us to also patronize cooperative bank and open the accounts. I think lastly is to say, all these materials that we've done the training. We have a portal, MSME portal, we've displayed out there, up there in the screen. We have a website, visit Core Bank website, there you'll be able to get the MSME portal. We have all the materials deposited there in terms of the training, all the presentations. Of course, we'll send this, but we have had several sessions that run on every week, on weekly basis. Very good materials that you can pick from there, and also share your comments there. With that, I thank you very much for attending. Back to you, Peter.
Thank you so much, Moses, for those closing remarks. Just to remind us that we be close to our business bankers and our branch managers on the ground. Asanteni sana, our customers, for joining good numbers, and I noticed that we joined quite early. We had almost 300 customers attend this session, which says it's a good attendance, and we really want to appreciate you for you, in attending. And it was a pleasure having all of you attend. We really appreciate. Thank you so much, our panelists. Chris, Asante sana. Thank you so much, Edward. I think you have really opened our eyes in terms of what we possibly need to do for our business. Thank you for that very informative session. I know we will continue to use you, continue maybe to have other sessions with you. And I'm sure we'll also share your details in terms of the contacts to our customers. So thank you so much, customers, for being patient. We've taken I think 8 minutes or 9 minutes out of the schedule, as we had thought that we would end at exactly 12:30. But thank you so much. I think it was worth it. We want to ensure that we have you engaged in the future webinars every Thursday. We're having the next one on Thursday, same time, and we'll be talking about people management. What are some of the things that then you need to have, some of the skills you need to have in your business to manage your teams very well, both your staff and maybe even the customers and the stakeholders that you have out there. So asanteni sana. We want to wish you all the best. We want to wish you well in your businesses. May God bless you. So I think we come to the close of it, and hoping to meet you next week. Asante sana. So bye-bye.
Bye.
Thank you.
Bye, Peter and the rest. Thank you.
Thank you, Chris.